Hey, it's Dave. We need more houses. The monthly new construction report came out today. This goes over housing starts, completed homes. Basically, it's the activity that builders are doing, and it tracks what housing starts, which is permits pulled, and can kind of forecast how things are looking going forward. And it also tells you the completion, so we know what actual homes have been completed on an annualized basis. So let's take a quick look at the report. Basically, we've got 1.4 to 1.5 million homes on an annualized basis being constructed. That's this information here. And you could tell by the chart here, we've been kind of hovering in the 1.2 to 1.5 range as far as completions go. That's the green line. Going back to 2018. If you've listened to any of the previous videos that I've done, I've talked about how we kind of need a million to 1.1 million homes built each year just in order to maintain the housing for the number of new household formations that we have. And so this on the surface looks like we're hitting that goal and actually should have enough housing so that you have the inventory that doesn't make prices go up so much. But you have to dig a little deeper into this report because it has the single family homes and multifamily homes built into one. So you look at building permits here, and we're looking at the forecast or the permits taken out, which is forward looking for single family as 818,000, and then for 5 units or more, you're looking at about a 543,000. So breaking it out, you're really under that 1 million, 1.1 million mark for single family homes. And that's not to say that these multifamily homes won't provide roofs over people's heads. We need that. But I am involved in home ownership, and I think you can build wealth through home ownership. And when you control the roof over your head, there is a tremendous amount of wealth. And the data shows that the net worth of somebody that owns their home versus somebody that rents is like 10x. So I'm a big proponent of owning the home. And so when we see that there's not enough property for people to purchase based on the amount of growth that we have in this nation, then it's concerning. Looking at the home completions, we did actually complete a little over a million on an annualized basis, over a million, and then with the 5 units, 484,000. That's rear looking, and we just barely hit that number. And so going forward, they look like they're a little more timid to take out the permits based on the high interest rate environment that we have, potentially a recession looming and things of that nature are causing home builders to not take out as many new housing starts. So we can kind of look at a little more data. This is, again, the permit issuing. And this shows last March of 1879 versus this March of 1449. So again, we're showing a decline there, which speaks to a little bit of timidness by home builders to be as aggressive in the home building. I'm not going to go through this whole thing and bore you with all the data, but just doing the highlights. And here is the homes completed March of last year, and then March of this year, pretty similar, 1629 to 1674. So again, that's kind of a rear view mirror, how it kind of speaks to how things were in 2022, and not so much how things are in 2023. Sorry, this is the completed one. Actually, they ticked up for 2022 versus now. And that's that lagging indicator where things were looking good at the beginning of 2022. More housing starts, finish those homes, and the rates have increased. And now the new permits are showing half as many permits pulled as homes completed for the seasonal adjusted over the last year. So still seeing that pressure. We do have some new construction deals to be had from those building of 1,500, actually, 1.5 million units. And then again, that's overall with multifamily. So you will see some deals from the homes that have already been built, but I don't see those going forward because they've lowered the number of permits taken out to build new homes. So let's look at this kind of information in a little different way. This is the total number of units completed going back to 1968. And again, like you could see some peaks, and this is the obvious one. These gray bars that are vertical here, these are recessions that have been, spread out throughout the decades. The last one is the Great Depression, where we really cut production, and then we've been kind of doing that Nike swoosh of building inventory back up. But we have about a 15-year gap where we were below the average that we held going up into that point. Here's a big spike in the early 70s where we hit like 2.3 million units. And then again here, 2.2 million units in 2006. But again, this is total units. So if I go back and break that out into single family, you see we don't get that peak in the 70s for single family units. We do get the peak before the Great Recession, and then again that Nike swoosh. But look at all of this period. Look at my cursor and not that little bubble that's bouncing around. That's at 1 million units. Where my cursor is, not where the little bubble is that's bouncing those texts. That's 1 million units, and we spent all of the early 2000s above it. We spent most of the 90s above it, all the way back to like 83. We spent completing more than 1 million single family homes. We didn't have a lot of that spike in the 70s. This is a high interest rate environment, similar to what we're going through now. A high interest rate environment with a dip, a high interest rate environment with a dip in housing completions because the affordability just wasn't there. When you look and break out the 5 units or more, the apartments basically, look at what they were doing back in the early 70s, and then a dip, and then recovering a lot, above. This is a 500, so 500,000. Mark is right here, and then stopping at about 1987, where it's housing affordability, interest rates are low. You get less than 500,000 multifamily units built for 2-3 decades until we just start to kind of peak at the 500 right around the pandemic. And these are, again, completed units. Now, if I go into housing starts, this is going to speak more to prospects when you get here to the current time, and look at how we've dropped after kind of doing that recovery for single family units. And we've dropped. The outlook is that housing could be in trouble. This is new home builders doing this. They don't want to get stuck like they did in the Great Recession, having to liquidate the homes. So they're very sensitive to stopping the permitting process, not buying new dirt, and not getting over their skis, so to speak, in the number of units they have to supply the market. And if we look at 5 or more multifamily, they haven't stopped that. You don't see that dip at the end of this chart. And that speaks again to the affordability. You may end up back in an area like we had in the 70s, where we really see a run on multifamily units being built because the affordability is not there, which is not good news. I don't know how we're supposed to navigate this environment where the Fed really wants to put a damper on inflation. So they want housing prices to come down, but there's no supply of existing homes, and nobody wants to sell their home at a discount. And we've underbuilt for over a decade of single family homes under that 1 million mark. I don't understand where the supply, this glut of homes, is going to come from in order to depress prices. Yes, with interest rates high, the affordability is bad. You will see the median sales price come down, but that's not because a $500,000 home is selling for $450,000. It's because A 450 home is all that people can afford, so that's what they're buying. So it's not that the existing home prices are having to take discounts necessarily. It could just be there's more people now trying to buy that $400,000 home, and they might actually bid that up to 450 just because that's the top of their budget, and there's not any inventory, and there's more buyers kind of in the under 450 range, and you'll still get multiple offer situations on the lower priced homes. Again, it doesn't mean that the $500,000 home is worth less. It's just not being sold, and they're taking it off the market. So here's an article from the National Association of Realtors that goes back to 2021, where they talked about, a once in a generation response needed to address the housing supply crisis. And they estimate that we have an underbuilding gap of 5.5 to 6.8 million homes. That goes to that chart that I was showing you, where there's just underbuilt since the Great Recession. We just don't have enough inventory. But one thing that has happened here, I'll see if I can pull that back up. It was housing starts. Well, we could do it in housing completed. And for single family units, that's this. They actually say since 1991. But I would certainly argue this period of time, when you're under the 1 million mark for 10 years, that's 10 million homes. Well, that's 10 million if homes that they should have built, but if they're averaging, say 600, 700, then you've got 5.5 million homes that are short. Now, what has our population been doing during that time? And that's pretty much summarized in this chart here. We have not slowed down. So the population growth is just almost on a straight line. And if you want to take a moment in time, like 2008, we were at 304 million, and now we're at 331 million. Where's the supply? I don't see it. So I don't blame the builders. It costs, I heard the other day in Portland, it costs $60,000 to pull permits to build a new construction home. The cost of dirt is, for a lot is going to be a couple $100,000 now, maybe 100 at the low end. So you're 160 to 200 before you break ground. That's not affordable when you have to, put a 1,600 square foot home on top of that. So they need to do more at a government level to free up land, make the permitting process easier, incentivize building. I mean, Portland has an urban growth boundary. Now, there's boundaries in San Francisco that are geographic. You are on a peninsula and you can't build on the water that easily. Portland has decided to do a fake geographic boundary with the urban growth boundary. It's a great idea to limit sprawl, keep commute times down, but the demand for dirt within that boundary, I mean, there's two words in there: growth boundary. That's not good for prices. I can tell you that. Prices go up when you have a growth boundary. You have demand without supply. They want to go vertical, build bigger buildings and things like that, and narrow footprints and stuff. That's great. Do it. You need to make it affordable if you don't want the rent prices to go up and the housing prices to go up. There's other markets like Houston where you have sprawl and you got dirt everywhere, where you can build homes, and so you have a median sales price that's about half of what it is in a metro area like Portland, despite having 5 times the population. So it's just interesting. I think there's some things that the government can do to free this up. But right now, the Fed is fighting for inflation to come down. They want rents to come down and house prices to come down. And I don't know how they're going to do that without breaking something serious. So that's all I've got for this video. If you've got any comments and want to continue to hear from me, subscribe or comment below. Thanks a lot for watching. Take care.